Your quick reaction on Meta and Microsoft. Big sell-offs on the stocks, both of them down more than 3%. Do you think that's warranted based on the numbers they reported?
I do, and I also think it's a simple reflection of just there being very little earnings enthusiasm currently across the market, giving the flurry of catalysts on the macro front we have jobs report on Friday, followed by the election on Tuesday, then we get the FOMC on Thursday. So there's just a lot of catalysts that people are trying to grapple with, and we have seen people degross over the past few weeks, and I think currently people are sort of comfortable with their current positioning and sizing, and now just seeing kind of what next week brings. But focusing back on tech, I think let's start on Meta. I mean, the number one issues into this print were positioning. Hands down, the most crowded of all the mega caps, probably 9 out of 10 at the minimum, and then just really lofty expectations, especially around the top line. They came in at 40.6 billion. Buy side was kind of hoping for a 41 billion number, and then the 2025 kind of capex, and they really didn't guide any number, which is frustrating. But I'd point to over the past couple of years, if anyone's earned the right to overspend, it's been Mark Zuckerberg, following the disaster.
All right, Joel, let's leave it on that for a minute, because we're showing the Meta chart right now. Again, Meta shares down 3.5%. So you're saying if anybody has earned the right to overspend, it's Mark Zuckerberg. The street just didn't seem to like this one thing. Meta's capex guidance going from 37 to 40 billion to 38 to 40 billion. I mean, it was just a 1 billion increase on the bottom end of the range, and I know it's $1 billion, but relatively not that big of an increase. Why do you think that really seemed to set off investors and concern them? It's just 1 billion on the bottom end of the range. The top end didn't change.
Yeah, I think people are just kind of nitpicking a little bit. Again, I think there's just not a lot of enthusiasm to add on additional risk right now, given the calendar that's in front of us. And again, look at their operating margins, 43%. I think it was 340 basis points ahead of where the street was. So, I mean, again, the company is just firing on all cylinders for the most part. They are monetizing AI, and it is coming up in a lot of their numbers as well. So I think, maybe near term it's a little bit soggy of a reaction, but I just don't foresee real money selling this print. Maybe the faster money that was hoping for a little bit more on the top line, but I think any sort of significant pullback, 5-6%, will get bought pretty easily by the long only community.
Let's switch over to Microsoft. The stock seemed to sell off a bit when they guided to just a bit of a cloud slowdown. I mean, 35% is really good. It beat our estimates. Even here on CNBC, we have some higher estimates than the street had. The street had it at about 29.5% growth, came in at 35. Why would just a slight guide down, still in 30% range, lead to a sell-off? Because I remember it was just a few quarters ago. If they were able to get 20, 25%, that was great. What's going on right now? Yeah, please go ahead. I'm cutting you off.
No. I mean, that's sort of the nature of this stock. It's been, I think the price action of Microsoft's a lot more concerning. The stock has been a huge underperformer, not just in recent, probably going back 2 to 3 quarters now, especially versus mega cap peers, other software, large cap software names. And the number one reason here is there's just been a lack of upward, EPS revisions. And so when Azure came out with their guide around 555 last night, they're looking for Azure growth around 31, 32%. The buy side was out at 33%. That's pretty poor. And that's also, the night before, Google Cloud came out and their growth was accelerated to 35%. So if you're comparing that, it doesn't, it just is very, very disappointing. And the fact
Joel,
that
before you get to the next thing,
cleaner.
We're almost out of time. I got to ask you, is there a read into Amazon particularly? They have a hyperscaler business similar to Microsoft, actually bigger than Microsoft, or is there a read into Apple? What is this telling us, or potentially telling us, about those reports that are coming up after the bell?
Yeah, I think Apple's very idiosyncratic in nature. People are kind of, wondering where the guide is going to come out and what kind of commentary will get around the iPhone cycle. For Amazon, obviously the read is for AWS. Third-party data there has been accelerating and has been pretty good. I think the bigger concerns around Amazon are more what's going on in the retail business, state of the consumer, and really just the operating income guide for next quarter. So I think Microsoft's a little bit insulated to a degree, just because there's been some issues there, and they've been trailing their peers. And again, it just feels like people want to own names like SAP, Salesforce, Oracle, in ServiceNow within the large cap software complex.